Namaste and welcome back traders. Today's session in the Indian markets was marked by a significant downturn, largely fueled by escalating geopolitical tensions and the looming fear of conflicts to continue. While global markets exhibited a strong rally, domestic indices succumbed to negative sentiment. So let's deep dive into what transpired today. The shadow of potential conflict clearly weighed heavily on investor sentiment in India today, leading to a notable decline across the board. Both the primary benchmark indices witnessed substantial losses. Indian indices plunged amid war fears. The Nifty 50 ended the day at 24,273 levels, sliding by a significant 140 points down, which translates to a loss of 0.58%. Similarly, the Sensex closed at 80,334 levels, down by a substantial 411 points or 0.51%. This sharp fall underscores the sensitivity of the Indian markets to geopolitical risks. Let's examine the sectoral performance, which paints a largely negative picture, reflecting the widespread risk of sentiment. Major sectors face a beating today. Today was a tough day for most sectors, with significant losses observed across the board. IT and media offer minor resistance. Interestingly, the IT sector managed to buck up the trend, posting a modest gain of 0.23% on the higher side. This could be attributed to the less direct reliance on domestic economic conditions and potentially benefiting from a weaker rupee in the times of uncertainty. The media sector as well saw a marginal uptick of 0.20%. The real estate sector was, however, hit particularly hard, plummeting by 2.47%. Fears of economic instability and potential dampening of investment in long term assets like real estate likely contributed to this sharp decline. The metal sectors as well had seen significant underperformance, which saw a correction of 2.09%. This could be due to concerns about global demand in the potentially unstable geopolitical environment or profit booking after a strong recent rally that we had seen. The auto sector also experienced a significant downturn, falling by 1.90% due to concerns about supply chain disruptions that could come up because of geopolitical tensions and also reduced consumer confidence that could be weighing on this sector. Pharma, on the other hand, also lost despite its defensive charm. The traditionally defensive pharmaceutical sector witnessed a notable decline of 1.62%. This suggests that the broad based fear of conflict overshadowed the unusual safe haven appeal of pharma stocks. Now, let's take a look at the global markets, which presented a stark contrast to the domestic scenario, exhibiting a strong rally. Asian markets showed optimistic movement on all the major indices, and it closed in positive territory. Japan's Nikkei was up by 0.41%, China's Shanghai Composite also gained 0.28%, and Hong Kong's Hang Seng also rose by 0.37%. European markets also displayed significant strength. Germany's DAX surged by 1.04%, France CAC climbed by 0.89%, and UK's FTSE, which had shown some recent weakness, was down by 0.33%. US markets witnessed a strong rally after yesterday's FOMC meeting. The Dow Jones jumped by an impressive 1.34%, the S&P 500 gained 1.4%, and the tech-heavy Nasdaq Composite led the change with a substantial increase of 1.75%. This strong performance in the US could be driven by positive economic data and hope of potential rate cuts in the future. Lastly, let's examine the commodity markets. WTI crude oil is currently trading at $59.57 per barrel, marking a significant increase of 2.58% from the yesterday's close. This surge could be attributed to concerns about potential supply disruptions in the event of escalating geopolitical tensions. As oil is a critical and sensitive commodity, that is when there could be increased demand that can be seen from multiple conflicting countries. Gold continued its upward trend, gaining another 600 rupees to close at a high of 99,600 rupees per 10 grams. This further reinforces the demand for the safe haven assets amid the prevailing uncertainty and fear of conflict. Silver, on the other hand, traded flat today, closing at 99,000 per kilogram, showing no change from the yesterday's close. Now, let's see what the chart suggests for tomorrow and how the open interest built up has happened. So, we are in the Nifty 50 daily chart. So as you could see, today, though our markets opened maybe negative slightly, and then there was a sudden downfall that we had seen, and this downfall continued typically when the news started escalating that Pakistan retaliated, and India also confronted that retaliation, and that is when it had been scaling into a full-blown war. So that is the reason we had seen a significant downfall coming in from the mid of the day, and this continued towards the end of the day. Though there was some recovery in the last 30 minutes, but then we already see the gift nifty trading almost 1.5% down from yesterday's close. So we might expect nifty to open roughly around 1 to 1.5% down, continuing to see this conflicts between India and Pakistan. So we have to closely watch how significant it is going to have an impact overall on our markets. So since India has been leading from the forefront, and we have been able to escalate and not see much of the damages as part of our military forces. So we have been de-escalating whatever targets that Pakistan have been trying on India. So we have to see maybe how this takes forward, maybe during the weekend and then next week. So as of now, for tomorrow, we will surely see some panic coming in, panic selling coming in while we open markets early in the morning, and also that selling pressure would continue throughout the day. Rarely we would see some buying interest coming in tomorrow. So 24,400 to 24,600 remains the crucial level on the higher side. So now that we have seen a significant sell-off coming in at 24,400 odd levels today, so we will now we now very clearly see that weakness coming in on our Nifty chart, and then we might continue a downfall for tomorrow. So either we would be trading at 24,000 odd levels, or we might see further downward movement continuing in case if 24,000 is broken out in tomorrow's session. So we are expected to see the gap down happening tomorrow. So if the gap down after the gap down, if there is a buying interest that continues and sustains, then maybe we might not see much of the escalations at least over a weekend, and then we might open flat to positive next week. But overall, for tomorrow's trading session, we would be trading in the range of 24,250 to 24,000 odd levels. Once we break 24,000 level, then we might continue Nifty to see on the downward trajectory, and this will open the maybe support for Nifty at 23,300 to 400 odd levels. So till then we might see a continuous slide on the downward trajectory because of this war kind of scenario. So overall for us, the immediate resistance remains at 24,400 odd levels. We may not see, at least in a week's time, these levels to cross on the higher side from the perspective of next weekly expiry at least. So on the lower side, we might see Nifty approaching towards 23,800 levels primarily, and then if those gets broken, then we will move towards 23,400 odd levels. Now let's see from the perspective of open interest. So today there was a expiry for Nifty, and then since it was a expiry, maybe towards the end of the day we did not see the fall getting continued. Maybe this impact would be seen tomorrow with the gap down. Though surprisingly today there were good open interest positions that were built up, but nothing significant at 24,500 and 24,300 odd levels. At every 100 points we see good open interest positions being built up both on puts as well as calls. However, the expectation was that since 24,000 we had seen that reversal coming in from the 24,500, so our expectation was that we should be seeing highest open interest at this level. But then somewhere there is some indecisive expectations, and could be because it is the first day after the expiry, that is when not much of the positions had been taken. But as you could see, at every higher level, that is 25,000 round level, as well as 25,500, we see significant 50 to 60% open interest positions already being taken on the very first day of 15th May expiry. So this suggests that we are not going to approach 25,000 in this week at least. So we might see good selling pressure that is expected to come in, and since there is already potential conflicts that are happening, so this is negative for our markets. So we might not at all trade positively once we move towards 24,000. So then 24,000 would act as the crucial support maybe tomorrow, and if that this gets broken down, then we will see 24,700 odd levels, 800 odd levels primarily as the first support, and then 24,500 sorry 23,500 as the second support. So yes, we are seeing some weakness already in the markets because of the war related news and scenario that Pakistan is trying to damage multiple cities in India. So overall on the PCR front, it is 1, and then at the money it is 0.72, which is not that significant, given the fact that it is only just one single day. So overall for us the focus remains 24,000 tomorrow on the lower side, and then 24,250 where the market had closed today. So this zone would be crucial. So if we unable to close in maybe 2 to 3 days time towards this range, then we will continue on the downward trajectory in the range of 23,500 to 24,000 for the next week's expiry. Now, talking from the perspective of Sensex, so Sensex also saw a red candle, and there was a sell-off that was very clearly evident at the higher levels of 81,000. So now for us, 81,000 remains the crucial, significant resistance, and we might not cross this resistance anytime soon. So we have Sensex expiry on Tuesday. So already market is expected to open gap down tomorrow, which could be in the range of 1% roughly, around 79,500 odd levels we might open, and then if we are able to stabilize there and see some range bound kind of trade throughout the day, then that would be acting as a support. However, if we see the downward trajectory below 79,500, then we will open Sensex to approach towards 78,500 odd levels for the very immediate stage, so which was also the previous resistance, and then now this would act as a strong support for us. So overall on the Sensex, 81,000 remains the resistance on the higher side, and then the first support would come at 79,500 tomorrow. If that gets broken, then we will open the gates for 78,500 odd levels for the weekly expiry on Sensex. From the perspective of open interest positions, we could very evidently see at 81,000 odd levels, there have been significant open interest positions that got built up today. And then even at the 80,800 odd levels, there is high open interest positions that got added. And at every 100 level, we see significant positions. Now, since because of the gap down, we will open somewhere, in this range of 80,000 or maybe 79,600 odd levels. So we will see some unwinding of positions in the puts tomorrow at all these higher levels. So the range for Sensex will remain as 79,000 for the expiry until 80,500. So there is going to be a broad range, but on the higher side, given the kind of uncertainty that we see because of war, we might not approach. The only reason maybe we could see a sharp bounce back in case if the other countries interfere and maybe de-escalate the tensions between both India and Pakistan. Like US can come in, Russia can come in, or maybe other European countries can come in and expect both India as well as Pakistan to de-escalate the tensions. In that kind of scenario, maybe we will see a immediate bounce back coming in, but if not, then we would continue moving towards the downward trajectory. Since the VIX is trading at 21, this suggests that at least for a week's time we will continue with a kind of range bound to lower levels that can open on Sensex. On PCR, it is 0.8 overall and then 0.7, which is neutral to slightly bullish. On Bank Nifty, again from the high which it opened positively today, from there we saw a significant sell-off. In fact, Bank Nifty was, it had opened positive and traded positive for almost mid of the day. And then post the news that broke out about the escalations coming in as part of retaliations from Pakistan, then we saw a significant sell-off that was seen in the Bank Nifty. So roughly there was around 600 odd points, 500 to 600 odd points that got shaved off from the highs. So overall now this remains as a resistance from where we had significantly seen that downward trajectory today. So today's high is going to remain the resistance for Bank Nifty, which is roughly around 55,000 odd levels. Now we might open for Bank Nifty to trade in the range of 52,500 odd levels, where it can take some support in the initial stage. So there is a big range for Bank Nifty to trade from 54,000 odd levels to 52,500, so around 1,500 points, in which the Bank Nifty is expected to trade at least for a week's time. So overall the resistance remains as 55,000 and the support could emerge at 52,500 odd levels. From the perspective of open interest, surprising that at 54,000 levels, despite there was a significant sell-off that we had seen, there have been no open interest positions at the higher strikes on Bank Nifty. It was very mild, but given the kind of momentum or sell-off that we had seen, we were expecting that there could be at least 30 to 40% of open interest on the call side. However, nothing of that sort was seen. In fact, on the put open interest writing, unwinding was also not that significant. So we have a very small unwinding that had happened at the higher levels. On the lower side, 54,000, we see some open interest addition on the call side, and good 20 to 25% open interest positions was seen on the put side. So still it suggests that bank nifty could definitely strengthen and hold the 54,000 levels for tomorrow. So let's see how it is expected to open comparatively to nifty as well as sensex. At least bank nifty had been performing well. So we just fell 0.4% on bank nifty, whereas roughly around 0.6% on nifty as well as sensex. So on that note, bank nifty is strong compared to the major indices, but we have to see because this is not a kind of positive note war for India as well as maybe Pakistan. So it might have some impact on our markets and definitely on banks too. So on the PCR front, it is zero point 0.8, which is positive overall, and then for at the money it is 1.09, which is significantly good or positive. But tomorrow's gap down and how maybe bank nifty is expected to perform is what we have to watch. Hopefully, some support can emerge at 54,000 odd levels for bank nifty tomorrow. Now on FINNIFTY, again from the higher levels of roughly around 26,280, we saw significant sell off that came in the mid of the day, and then this sell off continued throughout the end of the day. So for us, the immediate resistance would be 26,300 odd levels on the higher side, and then we might open gap down tomorrow. And this downward trajectory would continue at least for next week, even for the FINNIFTY. So we might take immediate support at 25,200 odd levels, so which is almost like 1000 points from today's close, roughly 800 points we can say. So it's almost like 3% from here on. So it might be difficult, but yes, this would be the immediate support. And then on the resistance side, it is 26,300 odd levels. So there is a big range of roughly around 4% to 5%, in which range the CNX Nifty or CNX FINNIFTY is expected to trade. So overall, the markets are expected to be negative tomorrow, and then we have to see at what levels the support comes in. Gap down is for sure, but if there is any buying momentum that happens, that would support our market. From the perspective of open interest, we see significant small open interest positions, but a significant expectation that for the monthly expiry we may not close above 27,000 odd levels. That is when we see there is no unwinding on the higher strikes on FINNIFTY. So on call side, it is standing tall, and then we see some open interest positions that got added today as well. But surprising that despite we closed below 26,000 odd levels, but still there have been no impact on the open interest positions on the put side. Rather, there was some slight open interest additions that had happened. So this very clearly indicates that bank nifty as well as FINNIFTY is getting a good support, and there have been good sector rotation that had happened, and banks have been able to also deliver good results, both private sector banks as well as public sector banks. That is one reason why these stocks have been positive, which is holding the bank nifty as well as CNX FINNIFTY. So this is one of the reason why it is not falling below the significant support levels, and immediately once we approach those levels, we see quick buying tick that has come up. So now that we have the escalations and tensions of war, this might be the reason for FINNIFTY to drift down below to 26,000 odd levels. So we will see in tomorrow's session to what extent the FINNIFTY is expected to fall. Will it be 1 1% or beyond that, and then where the supports can emerge. Can there be open interest traditions that will get added tomorrow at 25,500 levels and even 25,000 levels, and at each 100 points below 26,000 odd strikes. So tomorrow's trading session is going to be significant for FINNIFTY, given the fact that it had been holding these supports for a very long time. So tomorrow these supports would get breached, and how the FINNIFTY is expected to behave, and whether the buying interest would be seen at the lower levels is what we want to actually look from the perspective of tomorrow's trade, and accordingly we will take positions. So overall the PCR is not that great, 0.7, but at the money it is 0.92, which is significantly good and suggests some bullishness. Lastly, on the FII and DII data. So FIIs on index futures have significantly added their open interest positions, to the tune of almost like 7,000 open 7,400 open interest positions. So this suggests that FIIs still build good positions and remain strong and positive in terms of showing that buying interest despite looming geopolitical tensions. On stock futures, again they significantly continue to hold 18.35 lakh contracts on stock futures. On call options as well, they have added the positions of 2.73 lakh contracts. This could be majorly because of the Nifty expiry today. So tomorrow we might see a significant changes in the kind of open interest positions, typically on the longs or calls side. On the put options, again we saw 2.65 lakh contracts. So net there is no much change in the open interest positions, because on calls they are long, and on puts they are long, which suggests that they are expecting markets to fall down. So just 8,500 open interest contracts that FIIs are holding, which is not significant at all. From the proprietary traders perspective, they have taken short positions for 15,330 odd contracts on index futures. On stock futures, they continue to mildly hold 2.66 lakh contracts, which is okay. On call options, they are long with 72,500 odd contracts, and on put options they are short for 2,166 contracts. So net proprietary traders are quite bullish, with 74,691 contracts being held on long side. So tomorrow they will definitely see a good impact or losses due to this long positions that they have carried. On the client or the retailer side, on index futures they are short with 34,582 contracts. On stock futures, they are still continuing to hold 15.92 lakh contracts, which is quite bullish. On call options, they are significantly negative or short with 3.46 lakh contracts. So today, in fact, the retail traders would have significantly gained for the short positions that they have held yesterday, and today also they have added good short positions on the calls. But at the same time, on the puts also they have taken positions to the tune of 3.21 lakh short contracts. So this suggests that retail traders are short with 25,299 odd contracts. So net some impact that we would see on the proprietary traders for index options, provided if we open gap down tomorrow. Now lastly, from the perspective of cash market investments. So domestic institutions have in fact sold to the tune of 596 crores in the cash market. This was majorly absorbed by FIIs by pumping in 2008 crores in the cash market. So roughly around 4 times of the positions that they have absorbed from the DIIs end. So not sure why FIIs have been continuing to pump in from almost like 15 days, and despite the news was very clear that the war between India and Pakistan, or the military actions at least, has been strong, and there is strength to strength conflicts that is continuing from almost like 2 days now. So despite that, good buying momentum had been seen in the cash markets from FIs. So not sure what something information that they have and what is the rationale why they are continuing to pump in into the Indian markets. So this is the similar level from where we had significantly seen the sell off from the FIIs, when the markets had significantly seen the downtrend from 26,000 odd levels. But yes, at least some positivity that we are seeing, at least from one of the institutions, which will definitely hold our markets and not fall significantly for tomorrow's trading session and maybe subsequent trading sessions. So that's it from the perspective of markets. Uh, so today's session in the Indian markets was clearly dominated by fears of escalating geopolitical tensions, leading to significant losses across most of the sectors. So for tomorrow's trade, it is crucial for investors to closely monitor geopolitical developments as we are approaching even weekend, and should assess their risk exposure in this uncertain environment. So the divergence between the domestic and global market sentiments highlights the specific concerns of war between India and Pakistan, which is impacting our markets. So that's it from the perspective of analysis from our side. Uh, Comment us in below to this video as to what are your thoughts on today's market reaction and what could be the potential impact of these geopolitical risks tomorrow as well as in the coming weeks. So we will surely answer in case if you have any of the queries. So do comment in this video. So if you found this analysis informative, please like this video and subscribe to our channel for daily market updates similarly, and hit the notification bell to stay informed. So for tomorrow's trade and over the weekend, trade cautiously, and we will see you in the next video. Thank you.